So, hi everybody, this is also Hub. I'm Jacomo, and today I'm going to analyze Lockheed Martin. This is one of the stocks that you asked me to analyze, so an absolute leader in the defense sector. This is one of the stocks that you asked me to analyze. Really interesting stock, really strong mode, and given a situation in the world right now, I think it is extremely well positioned. Lockheed Martin. So we start off. Let me start off by making a few disclaimers. This is not financial advice. Do your own research. And second, the data that I've taken comes from either Seeking Alpha or the New York University website, the part managed by Aswath Damodaran, where I've taken the figures such as the risk premium that I use as a reference. So let's start with the assumptions. First, we try to calculate to estimate the weighted average cost of capital. Here we have the risk-free rate, the risk premium, and the beta. I have to say this is the last 24 months beta. This would lower our cost of capital quite a lot. In the last 24 months, Lockheed Martin has not been very volatile, but we have to expect it can. I don't think it can be this way for the long run. I would make it around one, um, and yeah, just for simplistic reasons, not to decrease too much the cost of capital. Yes, the past is a reference, but we have to take into account that it might not be that way in the future, and many analysts tend to normalize the beta anyway. They tend to put it around, so they say that in the long run, the beta always tends towards one. So I would make it one just for simplistic reasons, and here so that we can calculate a more, let's say, fair weighted average cost of capital. The cost of capital is also can also be calculated by estimating what is um, the the reference as a return given the risk premium that you have, and this the return that we should have should be something like an average of similar companies with similar risk. And given that we want similar risk, maybe we would take companies in the same sector as Lockheed Martin. So yeah, that is just another way to calculate the cost of equity, and as a consequence the cost of capital. But yeah, I would not lower this figure way too much, just because you have to stay conservative when you make valuations. So yeah, I would do it this way, even though what has even if we don't take into much consideration what has happened in the last 2 years. Probably Lockheed Martin will be required to invest a lot more and so on. It has a strong position, it will maintain strong earnings growth and so on, development and so on. But yeah, we can't stay too conservative, just because these are just assumptions. These are not guarantees for the future. Um, Here's the composition of the capital. Here's the debt to capital and the equity to capital ratios, and here's the estimates that we'll use to make to discount the free cash flows in the future. Here we have some highlights for the last 10 years for Lockheed Martin. Here we have revenue. We can see that it has almost doubled. It's close to doubling the revenue in 10 years, and probably it will do so because the demand for the defense industry will probably increase, given that probably all these conflicts and so on, all this volatility in the world is probably here to stay for the next years to come. So yeah, Next, we have earnings. We can see that the earnings have grown. They have actually, I think, doubled. So yeah, it has done pretty good. And then we have the free cash flow that has done as well really well on a year-over-year basis. Here's the formula if you want to use it. Yeah. Next, we start making assumptions. So if we expect Lockheed Martin to grow as it did for the last 10 years or so, this would be the result, and then we can see what is the value of the share as a result of these assumptions. And yeah, and these are discounted by these rates over here. And then we calculate the terminal value. Here we have the formula, and then we bring it to the present time by discounting it for the weighted average cost of capital. Then we add the two, cash flows and terminal value, and then we subtract some of the things that could dilute our value per share, that is the debt, and the restricted and performance stock units that are usually given to the management as a reward for their good operations, for bringing performance to the stock. So here we have the value of equity, and we divide it by the outstanding shares as of now, and we come up with the share value. And yeah, so we can see that given these assumptions over here, there's some good margin that would make it probably a buy. But what if, let's say, we have a higher cost of capital? We can change a little bit the assumptions, and we can see how that would change our margins. But I have to say that given that we are in such a volatile moment in the world with conflicts, turmoil, and so on, I would expect Lockheed Martin to do even probably better than what it has done in the past. I think that when Lockheed Martin publishes its reports, it also reports a sort of price to bill ratio, because when countries make orders to Lockheed Martin for jets, all the defense equipment, it takes time, maybe years, to deliver all the things they have ordered. So you can pretty much understand how it will go in the future by looking at the orders that Lockheed Martin has received. But you also have to take into consideration that maybe because of geopolitical tensions, international relations, and so on, maybe Lockheed Martin could not expand as it would want and sell to as many countries as the company would like. I think that, for example, when the relations between the US and I think Turkey were pretty bad a few years ago, the US government has blocked US defense manufacturers to export some of their products to Turkey, and Turkey is like the second biggest spender in NATO after the US. So these things can influence a lot the result of a company such as Lockheed Martin. But I think that, for example, NATO is here to stay. Orders are probably likely to increase. So I think that Lockheed Martin is anyway well positioned, and I think that I'm not going into politics. I just look at it from an outside perspective. I don't have interests in the US internal politics. I just look at the consequences that it has abroad. And Trump was in its first presidency was really pushing countries such as countries in the Middle East, for example, to buy US defense equipment. So it was part of his diplomacy. I remember that he pushed a lot for Saudi Arabia to buy a lot of defense equipment from the US. So probably if he comes back, probably there will be a push into selling more of this stuff abroad. So I would even make it probably higher than what it has done in the past 10 years. And yeah, maybe we can see what would happen if it grows by 8.5% instead of 7, and we make it, let's say, 4.5, and we see that the value increases even more. It has a good margin, and yeah, if we take back the cost of capital to what it was, we can see that the value would definitely be there. I don't think that if the orders increase by a lot, the strength of Lockheed Martin increases by a lot, it will be able to increase the margins dramatically. Maybe some, probably with scale, it will increase the margins, but not by a lot, because I think that Lockheed Martin will still be required to invest a lot in research and development so that it has an edge on the various competitors that it has within the Western world and in the United States, but also it will be pushed by the US government to invest more, research more, in order to have an edge on Chinese manufacturers, Russian manufacturers, and so on. So yeah, so here's my point on Lockheed Martin. I think it's a phenomenal company. I think that the value is there if you want to buy. I think that the demand is not going away anytime soon. The volatility and the turmoil that we're witnessing with the war in Israel, war in Ukraine, maybe these conflicts can go down a little bit, but the tension in the world is probably here to stay for some time. We don't know what will happen in any region anytime soon, but I think that this sort of instability is something that we'll keep seeing for the years to come. And as a result, Lockheed Martin will be there to provide defense equipment for those that will be able to buy them, and those that will be allowed to buy them. So this is it for today. I hope you liked this video. Make sure to like, subscribe, and comment with the next stocks you would like me to see, you would like me to analyze. So comment down below. This is it for today. I'm Giacomo. This is Hustle Hub. See you next time.